Welcome to the Brain Picker Pro Show, live from Lake Wiley, South Carolina. I'm Larry Goins. Thank you guys so much for watching or listening. We really, really appreciate it. Thanks for sharing the love. Thanks for the feedback you give us in the comments. We really, really appreciate that. Each and every week, we bring you a huge player in the real estate industry and people who are movers and shakers, people who are doing deals, having fun, making money, living the lifestyle, so you can learn from them and grow your own real estate business and create your own life vision as well. And today, man, I am so excited. I've been trying to get Tim Bratz on the line for so many months. We're in a mastermind together. This guy is a mover and a shaker. He's only, 33 years old, I think, and he's got over 2,000 units, apartment units, and does turnkey, private money, raises money, multifamily syndications. This guy is the man, the legend, and the myth. Welcome, Tim.
Larry, I'm excited to be here, man. And you've been a mentor of mine when I was first getting started about 10 years ago. I was actually used to use your proof of funds when making offers and wholesale deals.
That's cool.
Yeah, so I remember seeing you speak at one of the Charleston, South Carolina Real Estate Investors Association events. And
That's
been
cool.
following you for a long time, man.
There, right?
Yeah, for about 5 years. And might be going back, actually. I just contracted a house on Isle of Palms as a second home.
Awesome, man. Well, we got some good friends that live down there too, Caleb Pearson and Ron Phillips and some other guys. So that's awesome, man. That's only a few hours away from me.
I know. We're going to have to hang out.
That's really cool, man. I love it. Hey, why don't you start out and tell our listeners and viewers a little bit about yourself?
Yeah, man. Well, again, appreciate all the value you've given for a long time. And I know it comes back in a big way. And I love you and all the value and everything that you've been able to help a lot of people out for a long time. So thank you.
Awesome.
Thanks for having me. I'm excited to be here. I was going through, college when the market was going gangbusters last time, 03 to 07. Started a painting company, worked for one of the biggest home builders in the country. And then after I graduated from college, I moved out to New York City where my brother was living at the time and became a commercial real estate agent. So I brokered leases for retail and office space. And I brokered one transaction, $10,000 a month for 400 square feet in Manhattan for a 12-year lease term. And I did the math on it. I was like, this guy's going to make, with escalations and everything, like $2 million over the next 12 years for doing something at one point in time. And that was one space out of 8 retail spaces and 15 stories of apartments. And I remember just thinking, like, I'm on the wrong side of the coin. I need to be owning real estate instead of brokering it. Right. And so I ended up moving down to Charleston, South Carolina, just on a whim, and wanted some better weather and better lifestyle. And when I got down there, got into wholesaling pretty heavily, did some retail, HGTV kind of flips, did some short sales and stuff when the market was shifting, REO type stuff. And then, eventually you get acclimated with how to find deals, and then you meet people who have access to capital, and maybe they don't have the means or the resources or the time or the bandwidth in order to take down deals themselves. And I ended up partnering up with them and just doing some sort of like an equity split with them. They put up the cash, I did all the work, and we just kept on moving forward. And fast forward, I found one group of guys that I partnered up with, and in 2012, 2013. For the next 3-4 years, we bought a whole bunch of single-family houses, high-end flips, low-end flips, some single-family rentals, some small multifamily, and then I got into apartment buildings. So about 6.5 years ago, I bought my first apartment building. And, after that first year of really doing a lot with these guys, I look back where we were making our biggest and best returns, and it was in the apartments. And if they sold, because we'd flip it and roll it into something bigger.
Right.
If it sold, great. We made a great return on it. But at the end of the day, when I added in all the cash flow that came from it, it doubled the returns that I was making in single family flips. So we got rid of all the other stuff and just focused on buying apartment buildings, built up a portfolio about 150 units. That partnership went south. Just life happens and we didn't see eye to eye anymore. Had to liquidate everything because I was married across every single deal. So that was a big learning lesson for me, and I had to start all over in 2015, 2016. But some things that seemed like, a setback in the time are really a big setup for something bigger and better moving forward. And that was definitely the case with that partnership and the breakup of that partnership. I thought everything was crumbling around me, and then I just realized it opened me up for so much more opportunity. And today I'm talking with you at 2,563 units in my current apartment portfolio. That's all we do now is just buy apartment buildings.
Right.
And I have another 648 units closing in the next 3 weeks. So be over 3,200 units my birthday's next month too. So I'll be 34 then.
That's awesome, man. I love it. I love it. There's a lot of people that are interested in multifamily right now, commercial multifamily, and you started at a very young age. I mean, I'm 58, you're 33. And man, if people watching this would have just thought about scaling up and doing multifamily instead of sticking with single family. Now, I love single family. I like negotiating deals. I love getting on the phone, doing deals, right? Negotiating. We wholesale most of our properties. But you've got to create the passive income. And one of the great ways to do it is with multifamily. So you're really focused on that now. You really don't do, I mean, you've done turnkey, you've done private money lending and stuff like that in the past, but you really don't even focus on that anymore, do you?
I don't do anything other than buy apartment buildings, B-class apartment buildings, A and B-class areas. I don't do luxury, and I don't do anything in rougher areas or war zones. So I stick to that workforce housing in A and B-class areas, places where are safe, good school systems, good retail, economic anchors, all that kind of stuff. So I look for those areas. And then I stay in workforce type housing. So my average rent is somewhere between $700 to $1,200 a month in that ballpark. And, my average building size is about 100, maybe 120 units per building. And, I don't do a lot of transactions. There's a lot of turnkey providers and some of the masterminds that we're in together that are doing 200-300 deals a year.
Right.
And I might do 25 to 30, but it's on 50 to 150 unit apartment buildings, so it looks like it's bigger. And I think there's definitely an aspect, like I think a lot of people get into real estate for what you're talking about, the passive income, the residual income. And that's the allure that attracts a lot of people, that mailbox money. And then we think we have to stockpile the cash ourselves in order to go and invest in those things. And I think that's not an accurate assessment of real estate. There's a lot of people with a lot of money out there who don't have the bandwidth or the time or the knowledge or the experience on how to go and deploy that. They're good at making money and maybe keeping money, but not getting the money, making more money for them. So what I've been able to do is educate those people on what I do, how I do it. They can invest with me. I pay them a fixed return plus some equity upside on the back end, and they make a better return and better tax advantaged return than anything else toe to toe that's in the market. That's in a safe, stable asset class at the same time, right? So that's out there, and I've accumulated a portfolio. I'll be at $250 million of real estate, next month, and of that, I've put up less than $100,000 of my own money in those transactions because money's easy to come by right now, right? There's a lot of people looking to get their money out of the stock market, out of the volatility, and they have money in 401ks, self-directed IRAs, any of those kinds of things that they can then deploy into a real estate transaction and become an equity partner, an equity investor. So, commercial real estate is definitely a different animal. There's definitely nuances, different language, and some things you got to pay attention to. But at the end of the day, it's not as complex and over your head as a lot of people, I think, build it up to be in their minds.
Yeah, I think a lot of people do probably overanalyze it or overthink it. And you mentioned something a minute ago. There's a lot of money on the sidelines. Maybe they don't know how to get the deal, but there's a lot of people who have money. I learned a long time ago, there's two things you got to have to be successful. That's deal flow and money. Right? I
tell everybody the exact same thing, man. We are on the same page there.
That's so true.
It doesn't matter what the market looks like. If you can find deals and you can find money, you can do deals in any real estate market. Like those are the two most important skill sets. And those are the two things that we are spending. Those are the highest return on your time, right? Highest return on your investment. So you're spending all your time doing those two things, you're going to be in really good shape.
See, and there's a lot of people out there, Tim, that, you're a young guy. You're aggressive. You're motivated. You're hungry. And I know you've got a goal to have $1 billion in properties, right?
Right.
And there's a lot of people out there that have money sitting on the sidelines and they don't have the deal flow, but they're like, hey, I want to participate. I want some tax advantages, and I want to get a decent return on my money.
Mm-hmm.
So it's a marriage made in heaven, basically.
Yeah, I mean, you got to be with the right people, right? You have to be investing. So I do some education on this stuff, and I teach people how to scale up essentially from. I'll teach active operators how to scale up from flipping houses into apartment buildings, and then I teach. And they're great active operators, joint venture partners on a deal by deal basis that I'm able to partner up with, and I can bring money to those deals. And then I have other people who come out to my events and they're like, "Hey, listen, sounds amazing, but way too much work, way more than what I want to do. But I have money or I have access to money. How can we get involved? No problem. I can introduce you to some of these awesome operators, and you can get involved." And so I can kind of liaison the whole thing, or liaise the entire piece of the pie, or piece of the puzzle pieces, and then be involved in a way to make sure that the private money investors are protected. Make sure that the active operators are doing the right things and watching out for any sort of missteps that can happen in commercial real estate, which there's a lot of them, right? And so it gets me involved in more deals. And for me, I don't need 100%. Like in single family, when I was doing deals, I had to have 100% of the deal or pretty close to it in order to make enough money, right? Because flipping a house, you're making $20,000, $30,000, $40,000. That's cool. But if you start carving it up 4 ways, you can do a lot of deals, right? With an apartment building, you got one project that has millions of dollars of equity in it. You can have 25% of that, and there could be $1 million of equity in just 25% of that project. And so you can have a quarter of a watermelon versus 100% of a grape, and there's more juice in the squeeze of a quarter of a watermelon. And for me, that just makes more sense. I can focus on the things that I like doing, things that I'm better at doing, the things that are my unique ability, and then I can bring on A players, phenomenal single-family operators from the masterminds and stuff that we're in, and I can help fill the gaps on things that they are struggling with. They're able to help me out with being boots on the ground, doing the project management, all that kind of stuff. I can handle the administrative side and all that, raising the money. And then there's passive investors who get involved. And so it's a cool way where 1 + 1 doesn't equal 2. 1 + 1 = 3. We can all do more by partnering up together. And you're working with some really, really high caliber people who can operate at a really high level. So everybody's an A player. You don't have to deal with Billy Bob and his pickup truck doing maintenance on your single family house because there's not money in it, right? So you can attract better quality contractors. You can attract better quality property management companies, all those kinds of things. So there's definitely some scale in that.
That's awesome. Speaking of scale, a lot of people that are in real estate, or I should say most people who are in real estate started with single family, right? Whether it's buying land, doing wholesaling, fixing flips, landlording, seller financing, you're really good at helping people make that transition from, say, single family over to commercial. Mm-hmm. Give us some insight on that.
Yeah. So, I mean, one of the roadblocks that I had in my own head early on was, 1, I need to stockpile my own cash. 2, I don't come from family money, right? Like, I mean, my dad, very successful, always worked 3 jobs, full-time policeman, had a part-time business, and wasn't rich, but kind of the millionaire next door kind of guy, right? But I didn't have a granddaddy that had a big commercial real estate portfolio and passed along legacy wealth generations and generations. I didn't go to Wharton School of Business and graduate with a degree in finance or real estate. I don't have the initials. I never read a book on this stuff. I just kind of started in residential real estate and took my lumps and just kind of, I think there's a natural transition. You start brokering, you start wholesaling, you start doing retail flips, you start doing turnkey, you start doing property management, you start doing small multifamily or some buy and hold single family, and then all of a sudden you transition upward. And I know people who make a lot of money in single family. I love single family. That's where I came from. But the roadblock in my head was because I didn't come from commercial, I don't know if I can get into commercial. And I think it's a bunch of BS. I think it's just a mind game that we all play on ourselves. Because what I did is I just implemented the same strategies I used in single family, and I did it in multifamily. So what's the equation that everybody uses to flip houses? I got to be all in for what, 65 cents on the dollar? I do the same thing with apartments. Makes sense, right? So I'd be able. The only difference is I add a few zeros. So instead of being all into a house that's worth $100,000, I got to be all into it for $65,000. I'll be all into an apartment building that's worth $10 million, and I'll be all in for $6.5 million. That allows me And I always do value add. I don't buy anything at a retail price. I only buy things where I can force the appreciation, not speculate on
Right.
appreciation. So I'll buy an apartment building. Let's say it needs $2 million worth of work. If I need to be all in for 6.5 million, that means the most I could pay for it is 4.5 million.
Right.
So I'll go in, I'll make the offer, and then it's very predictable what the value is going to be 12 or 18 months down the road, because it's all based on the income approach. It's not based on what the house sold for down the street or the apartment sold for down the street. It's
Right.
what is the net operating income of that, and in that area, what's the cap rate that these things are appraising or selling for. So it's very predictable what the value is going to be, and then you could just kind of reverse engineer the numbers to know I got to buy it for 4 or 5. I'll put another 2 million in. Once I'm all in for $6.5 million, then I don't sell anything. Very rarely do I sell anything. Maybe some small buildings, maybe like some C class type stuff that I had early on in my portfolio. But for the most part, I hold everything and I refinance. And so if I know that it's going to be appraised at $10 million, I can go get a loan at 7.5 million, 75% loan to value, pay off the acquisition loan, pay off my private equity investors. Everybody gets all their money back, and there's still $1 million spread there
Right.
on refi proceeds. So it's the Burr method of single family: buy, renovate, rent. What I don't even know, refinance and hold it, right?
Yeah. Yeah.
So I do the exact same thing just with apartment buildings, and believe it or not, it's actually easier because the financing's easier, and like I said, management companies are easier to work with. They have more business acumen than maybe some of the residential realtors who are going out and managing 75 units or whatever. Contractors are more sophisticated and they understand business and they're more accountable, at least. And so, and then financing is easier to come by. It's assumed that you know what the hell you're doing, so they don't even look at they do it to an extent, but it's 10% based on the borrower and 90% based on the property. So it's as crazy as it is. It's easier to do bigger deals than smaller deals. And all I've done is I've taken my single family strategies and implemented it into commercial. And for everything from finding deals to renovating deals, like all that kind of stuff, I just use the exact same strategies. Raising money.
That's awesome, man. I love it. I love it. So it's really the same thing as single family. You just add a few more zeros to it.
That's it. And again, there's some nuances. There's some different things you have to understand with managing the management company and some of the different financing terms and strategies and all that kind of stuff. But from a global standpoint, looking down on it, it's much simpler than what we all make up to be in our mind.
That's great. Let's talk a little bit about building your team, because you've got to have a good team. I mean, you got to have a great property manager. You got to have a great construction crew or contractor. I mean, especially when it's $2 million worth of renovation, right? So you got to know what you're doing. You got to have good contracts with those guys and have right people on your team. Talk a little bit about building your team, finding the right.
So my team consists of 6 people. Me as a CEO, I really focus on my time on spending money and doing marketing, right? I have a CIO, Chief Investment Officer, who was an attorney and came in. The thing with attorneys is that they get paid transactionally, right? So they're trading their time for money the same way as I was doing when I was flipping houses or wholesaling houses. I'd have to go do it again to get paid again. So I found an attorney, pay him a base salary, not as much as you think, about less than 50 grand a year. And then he gets a little percentage of equity in every deal that I do. But he handles all the syndication docs, all the operating agreements, all SEC compliance, and he's an equity owner in the property. So essentially we have an in-house legal counsel and in the property for as long as we own this thing. So it's a really cool way to attract an A player onto my team and not have to pay multiple 6 figures in order to get that talent, right? Am I giving up a lot of equity? Yes, but I know this guy is an absolute stud, and it's been amazing having him on my team for the past 12 months or so. So he was my business attorney for the past 6 years, and then we came up with that agreement. So that's been awesome. I love having him on my team. And then I have a COO, Chief Operating Officer, who then oversees 3 other players on my team: my acquisitions director, my project management director, and my asset management director. And before, when I was doing residential, my acquisitions guy was just acquiring single family houses. I said, stop doing that. We're just going to buy apartment buildings. Okay. My project manager used to renovate houses and flip houses for us. Now he's just renovating apartment buildings. Same subcontractors, some of the different subcontractors and stuff too.
Wow.
But and then my asset manager used to be disposition. So he'd sell our turnkey houses or list them or whatever. And now he just manages the management company. So that's who's on my payroll. And then Excuse me. And then we have, a whole bunch of joint venture partners or people who send us deals, wholesalers, agents, and everything who reply and go through the acquisitions guy. And then on my project manager, he oversees the maintenance department. He oversees all the subcontractors, general contractors, developers that we partner up with. And then my asset manager oversees the management company and is making sure that occupancy is staying high, collections are staying high, and measuring all those different key performance indicators on a weekly, daily basis, actually. So that's my general team, and then everybody else is that's my staff that's actually on my payroll. Everybody else would be a 1099, either joint venture partner or subcontracted employee or some not employee but subcontracted vendor. But like I said before, is when you get into bigger deals, you have a $2 million project. One of the things I notice is that there's two main skill sets in business, right? One is the technical knowledge, the technical skill set. And then a contractor that's swinging the hammers, that's putting up the drywall, that's doing the electrical and knowing the ins and outs of that. But in every business, you still need somebody who understands business. It's a Steve Wozniak and the Steve Jobs, right? Or it's the Paul Allen and the Bill Gates. And you need both aspects because somebody really, really knows business and marketing and finance and people and all those things. And then the other person now just has the technical knowledge. And what I found is whenever I took the contractors on the residential side and I gave them so much business, they all imploded because they didn't have this side figured out and how to run the business. They didn't have the business acumen. And what I've realized getting into commercial is that a lot of the contractors who have the business acumen get out of residential and they get into commercial because it's bigger dollars.
Right.
So they're more accountable. I can put a contract together. I can hold them on time, hold them on budget, and it's actually easier to work with bigger contractors because they have the business side of things set up and they're more accountable. Same thing with property management companies. The property management company that I use out in like Texas and Oklahoma, they manage 22,000 units. So they only manage a few hundred units for me, but they manage 20. That's a hell of an operation that they've got in place. And you have to have your stuff together in order to manage 22,000 units and still have, over a 90% satisfaction rating on from all your clients. So building out a team, and then you have the scalability, right? So the contractors come in, and when I was flipping houses, every house was different, right? Every house had different finishes and different, custom work. Apartment buildings, you take all that reset up phase and the setup time that to do all that stuff, and you eliminate it because I can take you to one of my apartments in South Carolina, in Georgia, in Ohio, in Texas, in Florida, or Oklahoma, and I could take you in the living room, Larry, spin you around in a circle. You wouldn't know where you are because they all look exactly the same. Use the same flooring, use the same paint, the same finishes, the same kitchens, the same bathrooms. Everything's the same.
Cookie cutter.
And it looks nice and it's updated and it's better and it's clean and safe and functional. And then what happens is the contractor goes in and they learn how to lay the flooring in unit number 1 and install the fixtures in unit number 1 and put in the kitchen in unit number 1. Unit 2 goes that much faster. Unit 3 goes that much faster. By the time you get to unit 200, they're knocking this thing out really, really quick,
Right.
really, really fast. And so there's additional economies of scale that occur in the commercial side. So, for me and my goals, it works out really, really well. It's not right for everybody, but for me, my ambitions, my goals, my team, for us, it works out really, really well. We love it.
That's awesome, man. That's great. I love that. Talk a little bit about deal flow, because a lot of people are chasing multifamily right now, and you're doing A/B type deals, but value add deals. That's got to be really hard to find.
Yeah, well, it's interesting. I'm in a little bit of a niche where I'm bigger than some of the small multifamily investors. I'm smaller than the hedge funds and the REITs.
Okay.
And the hedge funds and the REITs aren't willing to do any work. They're lazy, right? They're big money. They have a bunch of cash. They don't care. They can sit on it for 5 or 10 years. They got real deep pockets. And so they just go buy stuff that's already stabilized.
Right.
So that's not me. I'm not willing to pay for something that's stabilized. I want to create equity. And they're not willing to touch the stuff that is over 100 units and needs a bunch of work. And it's very hard to get financing on that. You essentially need a hard money loan for something that's only 50 or 60% occupied.
Right.
And it's expensive, and you need to have a hell of a track record to do that. Fortunately, we do. And so we're able to get into this space where a lot of other people can't qualify for the loan, or they don't want to do the work. We're able to come in and get really, really good deals on this stuff. So just like there's motivated sellers in the single family realm, there's motivated sellers in the multifamily realm. Um, what is it? Death, disease, divorce, and disaster. That occurs in multifamily also. I bought 400 units earlier this year from a kid who inherited all that property from his parents. Parents built up the portfolio. This kid lives in a beach shack on the Gulf Coast of Florida. He surfs every single day. Doesn't want anything to do with managing an apartment building. Was running it. Wasn't paying attention to the management company. Management company charging 3 times what they should have been for grass cutting alone,
Right.
60 grand a year versus 20 grand a year. Right.
Right,
And
right.
all sorts of stuff like that happened. We were able to come in and say, hey, he doesn't want it. It's mismanaged. We were able to see where we could increase the income and decrease the expenses. Why would we do that? Because the net operating income is how you increase the value of the building. And if you can visualize some of that stuff, we're able to come in. We actually got a really good deal on a decently occupied. It was over 85% occupied when we got it, but it was a motivated seller. He inherited the property. He'd rather have $13 million cash than he cares about having, cash flow. So some people are still in that mindset. We paid him for that. We're all in for $16 million. We expect it to appraise around $29 million first quarter of next year. So why? Because we came in, we bought it for 13, put another 3 million, bumped up the rents, decreased a lot of the operating expenses, put better efficiencies in place, and now the net operating income, based on the multiple that it can appraise for, puts a value north of $28-29 million. So those deals are definitely out there. And you can do the same thing you do in the multifamily or the single family realm. Like we could do direct marketing. You could do mail marketing, right? Direct mail. You could do ringless voicemails. Like sellers of multifamily property have phone numbers and mailing addresses just like everybody else does. It's just a matter of timing, catching them at the right time.
Right.
Where do motivated sellers hang out? I ask myself that question a lot. I think motivated sellers of rental property, the most motivated I ever am in owning rental properties is when I'm evicting all the tenants, right? So go and hang out at eviction court. Go down to the county courthouse and on eviction day and pass out business cards to the attorneys, the management companies, the landlords who own property in your community and say, hey, I know you've haven't collected money in several months. I know you spent hundreds of dollars, if not thousands of dollars to go through this eviction. I know that you spent several $1,000s to turn the unit. It's probably a headache, right? Yeah, it's a little bit of a headache. Well, hey, I might be interested in buying it. Why don't we start having some discussions on that? So there's no reason. Now, talk to the management companies who manage all these properties. Talk to the attorneys who represent all these landlords.
Right.
You can drive for dollars. Look for, instead of houses with tall grass and boarded up windows, you look for buildings with tall grass and boarded up windows. You can go and dial for dollars. Instead of calling for sale by owners, I call for rent by owners and say, hey, I'm not interested in renting, but I'm interested in buying. Do you have any interest in selling? And so it's, again, the same strategies I use in the single family realm, just kind of converting it, pivoting for multifamily.
That's great. That's great. A lot of the things that intimidate people with commercial multifamily are analyzing the deal. I mean, you've got underwriting spreadsheets that could be multi-tabs, multi-pages. That's really
you don't need any of that.
Yeah. Tell us a little bit about analyzing a deal.
So this is one of my secret sauces, Larry. You sure? All right, man. So here's what I do. I realize that I've seen all these calculators. People selling them for $200, $500 online. Like, one, I'm not a spreadsheet guy, right? I'm more of a visionary. If you've seen a disc profile from me, I'm very high D, high I. So I'm not the analytical type. I'm not the numbers and digits. I can do it. I'm good at it, but it's not what energizes me. It's not where I want to spend my time. So looking at a spreadsheet and analyzing a deal for an hour or two, one, it's a tedious task. And secondly, you're not going through enough deals. This is a sorting game. For where we are in this market right now, you need to be able to move through deals and put them in a category of a deal or not deal very quickly.
Right.
And nobody else is out there teaching people how to do that. So secret sauce. This is worth tens of thousands of dollars and probably millions of dollars in multifamily. What I do is I figure out what the after repair value is, right? I don't care what it's worth today. I care what it can be worth when it's all stabilized. And I have a 2-minute metric. Essentially what I do is I look at what the after repair value rents can be at this. I don't inflate them. I just look at what's market rate rent for a 1-bedroom. How many 1-bedroom units are they? Boom, I multiply that out. What's market rate rent for a 2-bedroom? How many 2-bedroom units are there? Boom, multiply it out. Add it all up, and I annualize it. So if I got a 100-unit building and the 1-bedroom's rent for $600 and the 2-bedroom's rent for $800, I got 50 units of each. Essentially, I'm looking at what, $70,000 a month in income. That's $840,000 a year. And then in the areas, like this is the one metric that you need to know. You need to know where you're buying, what your expense ratio is. So about how much of that money is going towards your operating expenses for the property: vacancy, maintenance, management, utilities, just regular operating costs, right? And so for most of my buildings, that's right around 50%. And it could be a little bit less. Actually, in Georgia, my new construction stuff is way less. It's like 30, 35%.
Right.
My stuff that's up here in Cleveland, older buildings, been around for 150 years. We have a lot more maintenance on some of those things, and that's closer to 50%. So 50% is usually on the high end. It's usually closer to 40, maybe 45. But what I do is I just take the net or the gross potential rents, which is $840,000, and I divide it by 2, 50%. So it puts me at a $420,000 net operating income. For me, I have to be able to be all in and it yield a 10% cap rate. So that's me in the markets. That's because the areas that I buy in, properties appraised for around a 7% cap rate. So for me, it's a delta of 3% in order for my model to work, so that I can refinance in 12 months, cash out my investors, and just have house money in play. Essentially, it meets that 65% all-in ratio. That's just the way that I do it. So I have to be all in at 10 cap on something that yields $420,000 a year. That means my all-in price needs to be $4.2 million. You following me on that?
I do.
So divide by 0.1, I gotta be all in at 4.2 million. Then I back out whatever the rehab cost is. So if the rehab cost is going to be 10 grand a unit on 100 units, that's $1 million. So my maximum allowable offer on that property would be around 3.2 million. So I look at that number. I can do that in 2 minutes. I've done it 1,000 times. Maybe it takes 1 minute, right? And so when I do that, I can look at what the asking price is. If they're asking $6 million and I know I got to be on for 3.2, I'll shoot them an email. Say, hey, listen, I know where you're at. I'd be closer to $3 million bucks. Maybe 3.5 on this thing. Let me know if it's worth continuing the conversation. If they're at, and this is a snapshot. This isn't a true underwriting, but this is a snapshot to tell me is it worth it or not. Do I discard that deal and just focus and move on to the next one, or do I dive deeper into this deal? And if it makes sense, if they're asking 3.5 million and I can be all in at 3.2, guess what? I'm going to go dive deeper into the numbers, because chances are my operating expenses won't be that much, right? Chances are I probably don't need to put that much rehab in. So chances are I might be able to see and make this thing work. And chances are the seller might come down on price. So it allows me to have a snapshot where now I can sort through more properties. And instead of looking at 6 or 8 deals a day at best and underwriting them and taking an entire day to do all that stuff, we can sort through 20 or 30 deals a day and actually make offers on them too. Non-binding letters of intent, or at least just an email saying, hey, is it worth having an additional conversation on this? So now my acquisitions director can sort through more deals than anybody else can. And that's why we get more deals, because we're just better sorters.
Right. So basically you got to have the ARV and the amount of repairs, and the ARV is based on the market rents.
Yep. That's it. That's
really good. That's really good.
It's the exact same. Yeah. Same strategy that you would use to go and find or backtrack into the numbers. It's valued a little bit differently. Instead of valuing based on the comparisons, it values based on the income approach. And so if you understand the finances in the market that you're buying in, then you can just reverse engineer those same numbers the same way, and you can do it in 2 minutes, make an offer. Is it worth continuing the conversation? Yes, great. Let's start diving deeper. Then you can get out the calculator. Then I send it over to my commercial mortgage broker, who underwrites it with all the due diligence items and everything, and he gives me a to the dollar amount what we can pay for it in order for it to meet my model.
That's awesome. Now, Tim, you mentioned early on, I mean, you teach this, and I know you've got an event that you have, a 3-day event where you teach people. And I know a lot of the people that have been there from our mastermind, and I wanted to get some more information about that as well. Why don't you share a little bit about that with our viewers?
Yeah, I appreciate it, Larry. Yeah, I mean, hey, I'm not a guru. You know me way before I started teaching, right? The only reason I do it is one, I think wealth is like sunshine. I don't think there's a finite amount of it. I think, Larry, you getting sunshine doesn't take any sunshine away from me. There are tens of thousands of apartment buildings, 44,000 to be exact, apartment buildings over 100 units in the continental United States. And there's millions of apartment buildings under 100 units in the continental United States. If you did one 100 unit apartment building your entire life, your personal finances will change forever. You know, if you do one a year for the next 5 years, legacy wealth. I'm talking tens of millions of dollars in net worth, by managing and owning and operating this thing over the next 10, 20 years, and being able to pass it down to your heirs and all these other things. So to me, I'm not creating competitors. I have a lot of people who come out that I end up partnering with on deals.
Right.
So I built up a team, and I had all these employees on the management side, and I realized I couldn't stand managing other people. So what I did is I didn't create it, but I partnered up with some educators, some professionals in the education space. They run all the logistics. I show up a few times a year to teach and coach and mentor people. They handle all the logistics side of things. And then I'm able to partner up with awesome people who have skill sets that complement what I'm not good at, right? So I can bring money to a deal to a great operator, or if somebody has money, I can bring a deal to that passive investor. And we're all, like I said before, rising tide floats all boats. So that's why I do the education stuff. First of all, I don't need to do it, but I do it because I like it, one, and two, it actually helps me build my portfolio, and I help other people build their portfolios. So it's a really, really cool model, and I partner up with a whole bunch of students on a whole bunch of things, and it's a lot of fun. So it's called Commercial Empire, commercialempire.com. You can fill out the app. My team will reach out and give you details on the next one. Next one's in August in Cleveland, Ohio, and then I have one in Tampa that I think is going to be in early November in Tampa, Florida. So we do that and go over everything A to Z on my entire business model. So you don't have to partner up with me. You can do deals on your own. There's a lot of people who do. But if you come across a 200-unit deal, and maybe you don't have the balance sheet or the liquidity or the net worth or the experience, you can call me up. I'll come in. I'll sponsor the deal. I'll co-sign on the loan. I'll raise all the money and mentor you through the whole thing and help out that way. But we go over, an in-depth how to find off-market deals direct to seller, not through broker relationships like everybody else is teaching right now. And then I go over how to underwrite these things in a snapshot, and then do it, in a 2-minute snapshot, and a 5-minute actual underwriting, and then how to utilize your commercial mortgage broker to do it to the dollar amount. We go over all the SEC compliance type stuff. My in-house attorney comes in, teach you how to stay inside the lines of syndicating capital to make sure that you're not getting in any trouble there. How I raise private money. I'm raising $7 million right now over the next 3 weeks, and it takes a little bit of work, but it's not as much work as you might think.
That's a lot of money in 3 weeks.
And I have $4 million raised already.
Wow.
So and I've only been working on it for 2 weeks so far.
Wow, that's
so. Yeah, and we'll make it happen. I raised $4 million in 48 hours. I'll tell you that story at the event too. But how we structure it, how to have that conversation, why it's a better investment and why it's a better vehicle for your passive investors than anything else that they can invest in, the tax advantages of all that stuff. My entire team, I have on discussion panels each day to ask them any sort of questions. My acquisitions guy, my operations COO, my attorney, my commercial mortgage broker, all my resources, all the bad vendors that I've had to go through in order to create the power team that I have today. Nobody else has to go through all that stuff, right? I give you my entire power team and all my documents. My operating agreement cost me $8,500 to write up, and I give that to you. My SEC documents is about $15,000. I give that to you. So that way you can just take it, have your attorney review it, cost you a couple $1,000s instead of $25,000. And so my course isn't anywhere near that, by the way. So yeah, and then how we go through the whole value add process, the science behind that, making sure it's done the right way, having conversations with the tenants, and then different exit strategies. If you're gonna flip it, wholesale it, I really like to buy and hold, and then refinance and hang on to it long term, and then how to manage the management company, and we do some business development, how to build out your team, and some mindset stuff too. So it's good, man. And I know, we know Jason Medley's been out there, and a whole bunch of other people that have given us amazing reviews and say it's one of the best events that they've ever been to, if not the best. So it really means a lot to me that they say that. And I know we're doing something right because we're taking down deals with students, every month.
That's awesome, man. I love it. So not only do you get to share and teach people exactly what it is you're doing and how to do it, but there's an opportunity for them to bring you a deal, you to bring a deal to the money, and them to bring money to you and stuff like that, right?
Love it. Yep, absolutely.
That's awesome, man. I love it. So if somebody wanted to reach out to you and learn more in addition to your other event, what are you looking for? What do you need? What would you like to tell everybody? Hey, if you're looking for this or if you need that, reach out to me.
Yeah, I give away a lot of free content on social media. So I'm very active on Facebook. Find me on Facebook. Connect with me there. I put out a lot of good stuff on there. And then through my website also, I put out a lot of like blogs and content through my website. So find me on Facebook, Tim Bratz, Bratz. You can go to my website, legacywealthholdings.com, learn way more about me and, check out all the content and stuff that I put out there. And then if you want to get plugged into an event, if you want looking for more formal type of a coaching, come to Commercial Empire. It's a ton of fun. You get to plug in, you get to bring a guest, and you can come a second time for free at no additional cost in the future. So it's a win for students. It's a win because I'm able to teach and give and kind of pay it forward and do some deals with you too. So it's good stuff, man.
Sounds great, man. Thank you so much for being on. I really, really appreciate it. It's been a wealth of information. It's going to be a great show. And thanks a lot, man. I really appreciate that.
I appreciate you, Larry. Like I said at the beginning, man, you've been giving so much value for a long time, and you're a mentor of mine. So thank you for everything that you do.
Thanks, buddy. I really appreciate it. Thanks, everybody.